Korea's central bank has raised its benchmark interest rate. There had been months of speculation over whether it would go ahead with a rate hike over concerns about the economy's ability to absorb it. But as our Kim Ji-yeon reports, this could exacerbate the country's massive household debt problem.
The Bank of Korea raised the benchmark interest rate by 1/4 of a percentage point to 1.5%, the first rate hike in 6 years and 5 months. It puts an end to the record low key rate of 1.25% that the BOK has been maintaining since June last year. The bank's rate hike decision comes despite heightened geopolitical tensions stemming from North Korea's recent missile tests earlier this week. The decision to raise rates is mainly attributed to the fast recovery pace of the South Korean economy and takes into account various external factors, including mounting expectations that the U.S. Federal Reserve will raise rates again in December.
With signs that the recovery momentum is set to continue, keeping the rate steady yet again would have led to an imbalance due to the effects of further monetary easing.
South Korea's GDP growth in the third quarter of this year grew at the fast pace of 1.4% on booming exports, and consumer sentiment reached its highest level in almost 7 years in November as relations between South Korea and China improved. Despite the optimism projected by Korea's central bank, local experts raised concerns that the rate hike would increase the burden of the $1.3 trillion household debt, since it would severely affect homeowners' ability to repay their debts and raise the risk of people defaulting on their housing loans.
Despite the series of government measures that were unveiled earlier this year, the increase in Korea's household debt is showing no signs of waning. A rate hike could put a strain to those who have to pay more in interest payments, which means less spending power and thus prolonging sluggish domestic consumption.
The experts said the focus now is on how fast the BOK will raise rates again next year, which is expected to depend on the recovery pace of the local economy, housing market trends, and further rate hikes from the U.S. Federal Reserve. The BOK governor says it will closely monitor the housing market, but it projects the Korean economy to grow at around 3% next year on expectations that semiconductor exports will continue to rise. Kim Ji-yeon, Arirang News.